Has this amazing rally in the S&P 500 and the overall stock market finally starting to see a little weakness? After today's action, we are asking ourselves that. We're going to talk all about it. My name is Adam Anderson. I'm the owner and founder of WealthGuard Advisors.
Hello, I'm Blake Anderson, Certified Financial Planner. Thanks so much for joining us.
Yes, thanks for being with us. So Blake, we saw a little bit of a pullback and it went down pretty low today and worked its way up back through the day to where we're almost flat. It's really kind of a undecisive day. What's your read on this, Blake?
Yeah, we do see a little signs of slowing Friday and then into today, 2 down days. I think Friday's close was just low enough that it actually broke the positive week streak. We had I think it was 7 positive weeks until last week. So yeah, some signs that we might be getting a bit of a slowdown.
Which is not uncommon. I mean, 7 weeks straight up, but really this has been a historic run. And to see it pull back somewhat is not too alarming. We are still at all-time highs or within a few points of an all-time high. But I really want to break down what we were talking about a couple weeks ago, where there's really 2 sections of the S&P 500 that we look at. We look at the growth sector and the value sector, or companies that pay dividends. So if you remember my definition, generally a value company is the company that retains their earnings and then pays it out to the shareholders in the form of a dividend, a cash payment, as growth companies are reinvesting back into the market. So I want to look at that over this last couple days, because what we're saying is a lot of times they'll rotate back to those more stable dividend-paying companies. And today we see that dividend part of the market is up almost a little. It's right at 1.3%. And then let's look at the growth sector side of the market. Down 0.68% for the day. So we are seeing this bifurcation of the market where it's shifting back to that underperforming sector, the dividend-paying value companies, and the growth companies are what's giving it up.
Yeah, we're seeing this maybe a microcosm of this in the tech sector, where we're seeing, the software side of the tech sector was up today, whereas the semiconductor, the hardware chip side of the tech sector was down. So yeah, we have IGV, which is the software side of it, up 1.2%, whereas SMH, the hardware side of things, the semiconductor side of things, was down 1.8. So similar to that broader view we looked at, where value versus growth had this bifurcation, the swap. We saw it within the tech sector itself, which has obviously been the leader for the last couple months. This same sort of swap from the semiconductor hardware to software. And one part of this software space that's been interesting to us recently, particularly, is cybersecurity. The argument against software for the last couple months has been the AI replacement. We say, why would I pay for someone's software when I could just have AI write that same software or comparable software for me?
Got clawed.
So why do we need this?
Got clawed.
Yes, but there are some parts of software that are still really useful, even in an AI economy, and one of those is cybersecurity.
Yeah, you're right, Blake. We've seen the shift. I mean, all the software companies just getting hammered, as I just coined like it's clobbered. But one of the ones that we've liked, we've been a big Palo Alto Networks fan. We've been the CrowdStrike. These are the big ones. We have a lot of clients that are in those holdings, but a holding that we just started adding to our portfolio is Zscaler, and it's been getting a little bit of. It's not so much as an enterprise software company where like you've got to be integrated to their whole system. It's kind of a one-off package thing, so it's kind of hurt them a lot. But they seem to be going up, and today they had a huge run. We were buying this about a week ago, thankfully, We're up about 8.5% almost today. Um, and I want to talk about the strategy that we used to for some of our more aggressive clients. So what we did is we bought a option to buy the stock in the distant future, thinking that we have a lot of upward space on this here. And then just in case it was not going to do well, we actually sold against that to hedge it, to bring a little extra income in to offset that. So it's a strategy that we use for some of our clients that are more aggressive. So we didn't have to commit as much money to the position, and we also hedged it a little bit just to protect our holdings. So just to back up at 1 second here, but I just want to say if you just recently found us, this is really for our clients so they know what we're thinking about and what we're talking about. So if you found us, please like us, share, subscribe. We really love that. If you have questions, want to learn more about us, we're going to talk about that at the end, and all our contact information will be there. But Blake, back to cybersecurity.
Yeah, maybe it might be good to pull up the chart for CrowdStrike.
Oh
That has
yeah.
been, you know, huge growth recently.
Ooh, well, that was up 4% today. Nice run. Look at this parabolic move. 38% in just the last 2.5 weeks, 18 days.
Huge growth here. And we didn't see that yet in Zscaler. And I think that distinction is something that's important to pay attention to. One of the things with Zscaler is that they had trouble with their pricing model where their user seats didn't take account of this new AI economy where individual users would be running a lot of traffic through their servers because of these AI agents they'd be running through. But recently, Zscaler uh, launched a new pricing model. I think they call it Zflow, where it's basically based on usage instead of user seats, which CrowdStrike and Palo Alto has been doing for a while now. So we see this transition and that reflected in this turnaround in the price. And I did see they got a couple upgrades from analysts today. Um, and so we're seeing this pickup as they transition to this new AI economy where we're monetizing the usage by these AI models rather than just user seats, which is the more traditional way of pricing their services.
Yeah, I mean, it's a really an essential services in our current economy because cybersecurity, even us as a small financial firm, have to have a cybersecurity policy. We have to have measures in place to protect clients' sensitive information, and we're just a little player in the world. I mean, you think about these huge companies; we have to have it. They have to have it. Everyone has to have cybersecurity. It's an issue that we're dealing with across the world as there's bad actors out there that are trying to do malicious things with people's data. And there's security concerns, not just with information, but with all kinds of things. So there is a cyber war going on out there between those people that want to do malicious things with accessing people's networks and information and those that are trying to protect it. These Zscalers, the Palo Alto Networks, CrowdStrikes are the good guys. I guess we could say Snowflake. There's maybe Palantir and other ones out there like they're in that same camp. But these are some of the companies we're looking at, ideas we have. Now, when we buy something like this, we're not going to go all whole hog into one position. We want to be diversified. I think about the quote from Jacob Rothschild, of course, the Rothschild family, one of the richest families in the world, dominated finances for generations. Said, I never get the top, I never get the bottom, but I get somewhere near the both. And that has made us very rich. So timing the market is always a challenging thing to do. And diversification is always the best thing to enter with a plan and a purpose, a strategy, and an exit strategy is really what we're doing for our clients, making sure that they're diversified, making sure they have access to good protective assets, good long-term assets, and maybe some areas where they can get a little extra juice if things are going well.
Yeah, here at WealthGuard Advisors, we're a registered investment advisory firm and committed to always putting our clients' best interests first. We specialize in personalized asset management and financial planning designed around your unique goals and objectives. If that's something that interests you, we work on a straightforward fee-only basis. No account open and no account closing fees, just transparent pricing for the services we provide. If you're ready to take the next step towards a confident retirement, we'd love the opportunity to sit down and talk with you and see if we could be of service. If you have any questions about what we discussed today or would just like to talk, we're available for that as well. You can find our contact information down below.
Thanks. We love you. See you next week.